Hey, good morning, everybody. Today is Thursday, March 17th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CAN-SLIM to identify the important elements of what he's looking for in a trade. The C in CAN-SLIM stands for current quarterly earnings and sales and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and sales, and preferably accelerating earnings and or sales. The L in CAN-SLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 11 came from the real estate investment trust industry. 9 came from semiconductor devices. 8 came from precious metals. 6 from airlines. And rounding out the top 5, we had integrated utilities, lodging, and commercial vehicles, all with 4 each. We've been seeing a lot of airlines recently. We've been seeing a lot of precious metals, and we've been seeing a lot of real estate investment trust. Semiconductor devices have also been showing up quite frequently recently. All of these may be good places to look for leadership in this market. Let's start today by taking a quick look at the Russell 2000. We've been stating for a while now that the Russell 2000 is the key to this market going forward. The Russell has really been struggling with this support resistance area in the 1079 range. I'd like to see the Russell take out this area in convincing fashion. We've been noting recently that small cap stocks are underperforming large caps. Notice how the Russell 2000 today was only up 74/100%. Russell continues to struggle with support and resistance down here in the 1079 area. I'd like to see it break decisively above there, and then we'll get a little bit more bullish about the market. Let's take a look at what the NASDAQ Composite's up to. But before we do that, the M in the CAN-SLIM acronym stands for market, and to my way of thinking, that's the most important element. So let's take a brief look at the market. Stocks shook off early losses yesterday as the Federal Reserve Open Market Committee wrapped up their much-anticipated meeting, leaving interest rates unchanged. Trading volume was below average, but higher than the prior day, giving us an unconvincing accumulation day. An accumulation day is a day when the market advances on heavier trading volume than the prior day and is considered a sign of institutional buying in the market. It's that institutional buying that the CAN-SLIM system is trying to identify and capitalize on. Our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. We now have only 28 stocks in our universal watch list. That's an unusually low number. In a healthy market, we generally have between 50 and 90 stocks on the universal watch list. That noted, we remain cautiously bullish on the market. If the market remains healthy, the number of stocks on our universal watch list will continue to climb. Advancing issues top decliners by considerably more than 4-1 yesterday. The New York Stock Exchange advanced decline line continues to look more bullish. New highs continue to outperform new lows. Our overbought, oversold indicator is back to an extremely overbought condition in the market. Keep in mind, an extremely overbought market can become severely overbought. The fly in our bullish ointment, large capitalization stocks continue to better small yesterday by a wide margin and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. The market's decidedly more bullish than bearish, and while we've come off a few-day pause in the bull run, we remain quite overbought. I do believe that we're in need of a more serious consolidation or correction of recent gains. Traders may want to take advantage of any weakness that develops to add to or tweak their portfolios. That noted, be careful, and as always, keep your stops in place. Okay, yesterday the NASDAQ Composite was up 35.3 points or 0.75%. We closed at 4763. Notice how we balked at this trend line one more time. We really need to take out this trend line, which goes all the way back to the beginning of the bull market back in 2009. Trading volume yesterday was higher than the prior day, giving us, as I noted earlier, a very unconvincing accumulation day. For you followers of William O'Neill, we are currently in a confirmed uptrend in the market. We have been since February 18th. We are showing 4 distribution days on the NASDAQ since confirmation of that uptrend on the 18th of February. Investors Business Daily is showing 5 distribution days. 5 distribution days is a lot of distribution for a month. But note that over the next couple of days, we will lose these 2 distribution days. And so 5 distribution days isn't as much of a concern as it might normally have been. Right now, the NASDAQ Composite is bracketed by resistance at this trend line. Were we to break through that trend line, next area of major resistance is up here in the 4900 area. Note, we have the 200-day moving average right here. That's going to provide a little bit of resistance as well. Support is down here in the 4506 range. Our market timing model is currently on a buy signal. The buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Let's take a look at the S&P 500. S&P yesterday was only up 11.29 points or 0.56%. We closed at 2027. Notice how we took out this resistance at the 200-day moving average. That's a bullish sign for the S&P 500 and gives us hope that we can challenge this 2044 area. Trading volume yesterday was considerably higher than the prior day, but again, it was below average, giving us an accumulation day, but pretty unconvincing one. The S&P 500 is in a confirmed uptrend, has been since February 18th. The S&P only has 1 distribution day since confirmation of the uptrend. Right now, the S&P is bracketed by support down here in the 1993 area and resistance up here in the 2044 range. Our market timing model on the S&P 500 is indicating a buy signal. Before we go, I want to talk about 3 stocks. The first we've talked a lot about recently, MaxLinear. MaxLinear provides radio frequency and analog mixed signal integrated circuits used in communication and video display over broadband networks. The stock has been working on this 3rd stage base. Keep in mind, a 3rd stage base is a little bit more risky base. It's a later stage base. We'd prefer to buy 1st or 2nd stage bases. But MaxLinear gets an 88% checklist rating, and right now that is a very high rating. We've been watching this base in the 1775 area. Yesterday we broke out of that base on extremely heavy volume. MaxLinear has been showing a lot of good accumulation recently, and we want to see these spikes in buying volume in the stocks that we go long. Yesterday, MaxLinear, in addition to breaking out of this base, traded higher volume than any down day in the past 10 trading sessions, which is our definition of a pocket pivot. MaxLinear can be bought here by aggressive traders, keeping in mind that this is a fairly late stage base, and so you want to keep your stops in place. Next, I want to take a look at Installed Building Products. Installed Building Products provides new and residential insulation installation services with over 100 locations servicing customers in 48 states. There's a lot going on with this stock. Primarily, the stock is working on this double bottom base formation with a pivot point in the $25.70 range. Also, we have this trend line, which should be offering resistance. We have the 200-day moving average, which is also offering resistance here. Yesterday, we traded higher trading volume than any down day in the past 10 trading sessions, which is our definition of a pocket pivot. I'm not sure that I would recommend buying installed building products at this point based on that pocket pivot, but if we were to take out resistance at this trend line on heavy volume, or if we were to break above the 2570 area on heavy volume, installed building products might be a good place to look for a solid trade. Installed building products is in a first stage base. We have a consolidation pivot point up here in the 2997 area. So the 2570 area gives us a really nice early entry. Installed building products gets a 72% checklist rating. And the last stock I want to take a look at is an old favorite, Mobileye. Mobileye is an Israeli developer of software and related technologies for camera-based advanced driver assistance systems. They will be integral in self-driving cars. They long have been one of my favorite stocks on a fundamental basis, but the stock has been acting fairly poorly for about 6 months now. Yesterday, we broke above this long-term trend line. This trend line goes back well over 6 months on heavier trading volume than any down day in the past 10 trading sessions. Mobileye currently isn't in a recognizable basing pattern. We may set up a base here. This may be the beginnings of a base. But Mobileye can be bought by very aggressive traders on a break above this trend line. If the stock was to fall back below that trend line, that would be my stop level, or 7.5%. We always stop stocks at 7.5%. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.